What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 27th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to have a genuine one-on-one conversation with you guys, talking about everything Bitcoin, Ethereum, the broader crypto market as a whole, and just share my genuine thoughts about where things are going over the next couple of months, because I have some things I not only feel I need some time to discuss here on the channel, but outside of that as well, there are some things in which I really haven't seen people talking about, I think, in a kind of sober way. I'm seeing a lot of expectations, a lot of euphoria that things are not only guaranteed to go up and to the right, but outside of that as well, that they're expected to go up and to the right to a very large extent. Ethereum, $10,000, all these really big price tags that are being tossed around. So I want to go ahead and try to provide a more sober take on all this, and maybe just try to provide a visual representation of where I'm coming from mentally, far beyond even just the charts and all the data. So I want to start the conversation off with one thing, my crypto journey. I'm going to keep it very short, but I think this is a really interesting metaphor to the point that I'm going to be talking about today. I started crypto back, I've known about Bitcoin since 2011. I really wrote it off like most people did initially, but really started getting involved in late 2016, early 2017. Ironically enough, it's coming up here on exactly 7 years, more than 7 years, since I've been directly involved in some way in the crypto industry. I started building a lot of my first positions in the kind of Q1 period of 2017. And at that period of time, the entire valuation of crypto markets, and I'm curious, maybe you guys can take a guess at this, was valued at $25 billion. It sounds like a big number, right? But that is 1/100th of where we are here today. If you take a look at the total metric for market cap across the board in crypto, we are sitting right now at exactly right about $2.5 trillion. 25 billion, 2.5 trillion. A 100x multiple in valuation in the crypto space. Now, a lot of that has to do obviously with Bitcoin and Ethereum rising to their positions today, but it also has to do with an altcoin market that has grown much larger from where it was before and has had some returns of 50x's, 100x's, 200x's, 1000x's, all the kind of crazy multiples out there that you just can't find in other markets. And now I want to talk today, though, about the changing dynamic here. As someone who has been in this industry, as someone who's always been, I would say, someone who is a macro trader, where I always try to find these kind of niche opportunities where I can really park my money for the next 2 or 3 years. I don't have to do a lot of thinking. I don't want to be doing a lot of things because I don't want to make any mistakes. I don't want to leverage trade or have to take borrowed capital to make great returns. I don't want to be playing in too much risk. I want to find that nice medium risk, medium reward play that's not passive investing in the market and like the S&P 500, but is also not going to be speculating on penny stocks or in some speculative, emerging technological protocol or niche market, right? And for me, crypto back in 2017 was a shining example. It is exactly what I was looking for. And I think so many people back then who, again, like myself, had kind of brushed off for many years. Once I saw Bitcoin come back up to its prior highs of 2013 at $1,200 in kind of Q1 of 2017, that was beyond a doubt the moment I realized that, wow, I made a mistake. I wrote off crypto for so long. I thought I claimed the Silk Road. It was dark web money, that Bitcoin was only used by criminals and it was a bubble and this 80% correction means that it's never coming back. I admitted at that moment that I was wrong. I read the Bitcoin white paper, I learned about it. And for me, that was a moment where I really started to shift my mindset that this had, the sky was the limit. This thing could really grow from this point on. And what do you know? Crypto here today is worth over 100 times what it was as an entire market cap, as market value. And that's really great. I think that's awesome. It has made life-changing returns for many people, including myself. But I'm here today to send a really important warning here. It is not that I wish bad amongst anyone, that I don't want someone else to experience what I experienced then. And to make it very clear, crypto is not the only market I've succeeded in. I've traded in equities before. I've captured really early stage trends. What I'm here to say, though, is that you're not going to get anywhere near that kind of multiple expansion over the next decade with crypto being at a $2.5 trillion market cap. This is a fundamental reality. It's the concept of diminishing returns. Anyone who does cycle analysis, anyone who is setting their price targets for Bitcoin will probably tell you that as well, even if they're much more bullish than I am about the future of crypto, that there is generally diminishing returns over time. Things can only go up to a certain extent. And I wanted to talk a little bit about, the expectations around, the institutionalization of crypto. This is really the narrative of this move in crypto over the last couple of months. And what I'm going to be talking about today, maybe back, a year ago in 2023, would not have been relevant, but now it is incredibly relevant, and it's starting to show in the price. And that is that the narrative in which drives cycles, once materialized, once realized, is usually the peak of a given cycle. I want to kind of demonstrate this here in practice. If we look back over the last couple of cycles, in 2017, the narrative was kind of the first introduction of institutionalization. It was the launch of the Bitcoin futures contracts for the Chicago Board Options Exchange and the CME, Chicago Mercantile Exchange. This was the narrative. This is what drove Bitcoin from a couple $1,000s, at the times where Jamie Dimon was calling Bitcoin a scam. There was this China FUD that Bitcoin was being banned in China, whatever, around $3,000-$5,000, shooting it all the way up to $20,000. I remember doing live streams. You guys can go back and find those videos. It was a crazy, crazy time. But when those ETFs launched, when those futures contracts launched, that was the cycle peak. Okay. And from there on out, we proceeded to correct all the way down to $3,100. Afterwards, in the depths of the bear market in late 2018, we started to formulate a bottom and started to trade back higher off of new exciting hopes of narratives like DeFi in the altcoin space. We also saw talks of MicroStrategy, this company, this previous dot-com bubble company, coming in with a very predictable business model, monetizing its revenues and going out and just buying swarms of Bitcoin. And this narrative that there was going to be this trend of corporate treasury, acquisitions of Bitcoin. And we saw Tesla and a couple other companies do it. It didn't really manifest to the extent I think people would hope for, but it still, MicroStrategy and a couple other companies were buying up Bitcoin, and that had demand to the supply against the supply on the market and led prices higher. Not to mention we had the Coinbase IPO. All these events, especially the Coinbase IPO and the launch of paper Bitcoin ETFs back in 2021, those were the events that essentially sat in the top for Bitcoin and led us back down towards new lows for that bear market period, down towards what we saw when we had the Celsius and BlockFi liquidations, and we had the collapse of FTX, and led us down essentially towards that kind of price tag that we saw around the lows, right? In that 16, 17K range. Well, since then, we have had the, I think, ultimate catalyst here that people are rightfully excited about. And to be completely frank, we were a bit late to in 2023. And that was the launch of Bitcoin's ETFs, right? Going from just exchange traded notes like the GBTC product that had been around for many years prior to an ETF product to where anyone, pension funds, institutional investors, anyone out there, from mom and pop retail investors to the highest level of institutions, could go out and buy Bitcoin, spot Bitcoin. This was the narrative. And to be completely fair, since the launch of those ETFs, we have seen inflows. We've seen prices moving higher, and we are now back to those prior highs, basically where we were back in November 2021, the prior cycle high. And, the big thing here I want to talk about is that while we're at this point, what we've seen since back in February is price stalling around these prior all-time highs back in November 2021. And I'm not here to say that that's the end of the world, but it is a little bit telling here. And it's telling of something that, again, needs to be considered when you're setting your expectations for the future and your investment strategy. We have been stagnant here for more than 2 months. It's coming up on nearly 3 months here that we have been up in this price range. And the reason why that is noteworthy, why it is important for you to consider your expectations of where things can go, is it showcases with the available data that we have that the current rate of ETF inflows that we have, which is thousands of Bitcoin sometimes per market trading day, even if you were to dilute it over weekends, for example, you're still seeing about 1,000 to 1,500, maybe even 2,000 Bitcoin being purchased on a daily basis by these ETF products. We've gotten past a lot of the negative things. We got past the GBTC outflows. We have the halving event now, which reduces the amount of mined Bitcoin per day, further reducing the inflation rate for Bitcoin. And now you still have these ETFs coming in and buying up Bitcoin. So you might be asking the question, after 3 months, why are we still here? Why are we still at this price range? And it's a point that we've really tried to talk about here in this channel. And I get it, like overall, guys, like it sounds like it should lead prices going higher. But the problem is that you have to understand is that for every bit of new Bitcoin being purchased by these spot Bitcoin ETFs, there's someone else selling. And I think, I again want to come back here to this point here. This is not something that you can truly extrapolate through data. And it's not something that is 100% guaranteed to explain why this is going on. But I think it's a pretty realistic thing that happens in markets time and time again. When you have something, kind of new and shiny, like Bitcoin was back and crypto was as a whole, back at a $25 billion market cap, when it is easy to mine multiple Bitcoin per block, back in the day, way back in the day, before some of the halving events, you could mine 50 or 25 Bitcoin blocks with a couple of GPUs or like a really simple like ASIC miner. You were getting a lot of Bitcoin for very little investment compared to what you would get nowadays, considering especially the new halving event. And you have a lot of these people, there are a lot of whales out there who just have thousands upon thousands of Bitcoin. We don't know who they are. In conglomerate though, they hold large sums of Bitcoin. And if you don't believe me, you can go ahead and take a look on BitInfo charts. They show the wallet distribution of who holds what. And I think what I'm getting towards here is that we are entering an era here where essentially there is going to need to be so much inflows to satisfy the distribution and sell side pressure of old holders. It's not just, retail, starting to cash out here and you retail investors cashing out their 0.01 BTC, their 0.1 BTC, or even potentially one whole Bitcoin. I think you're seeing a lot of large sell side pressure from kind of new money here in this case into buyers from old money. And I think it's very, very imperative to be cautious here that if this continues and we do not see Bitcoin clearing through that resistance range that is currently playing out now, what I think could very well be a distribution channel, it could be a sign of the unthinkable. It could be a sign that we may very well not be expanding as high as people thought before. Maybe we do break through it, but at a much slower pace, or maybe we need to go through a healthier correction here in the near term. Right. So again, I'm not here to talk particulars, particulars, oh my gosh. I'm rambling too much, guys. I'm trying to get back into the swing of things. I was sick last week, but I don't want to get into the particular predictions of, it's going to go up or it's going to go down. What I'm here to just heed caution on is I think that it is telling within price action that we have been hanging sideways here for a while. And I think that should keep us a little bit more moderate in expectations, let alone when we now have additional ETF products for essentially getting capital from institutions into other alternative crypto assets like Ethereum, right? And that might be great news for Ethereum particularly, but that might very well steal a lot of the show away from Bitcoin. And this gets me again to this point here, again, coming back to valuation. Valuation is key here. Diminishing returns is the critical topic here. It is going to be very difficult for a $2.5 trillion market cap to double to $5 trillion versus when we were at $25 billion to $50 billion. If you look back at the charts, we went from $25 billion to $50 billion real quick in a matter of less than a few months, very small window of time. Going from 2.5 to 5 trillion, just a doubling, in the industry is going to take so much capital, so much optimism, so much euphoria. And we certainly aren't seeing the mass money printing that people are expecting should be playing out right now. The M2 money supply is not expanding at some rapid rate like it was in 2020. You are not seeing the excessive risk on behavior. Recessionary risk is on the minds of many people out there. And whether or not you agree with that or not, all those things start to affect the supply and demand imbalance. And if we're at a point now, as we talked about earlier, in the sense of narratives kind of being cycle tops, where the halving event is done, the ETFs are live. The SEC is no longer preventing a barrier to entry for this institutional capital. And now we're at the point where anywhere in the world, if you want to buy Bitcoin, you want to buy Ethereum, you want to buy crypto assets, you can do it. Now, there are very few limitations on inflows. What's the next narrative? What's the next thing to get excited about? It certainly isn't the fundamentals of the technology. God, I gotta tell you guys, that's something that's not up for debate. DeFi, totally stagnant, dead in the water, not even touching the real world in an extent. The same applications, Uniswap, Compound, and Aave are still the best applications. And I'm not bad mouthing them. I think they're cool apps and all, but they're all a part of this kind of circular bubble that doesn't actually create value in the world. It is simply this echo chamber where yields are sustained by more participants coming in the market. And if those participants don't come back, a lot of the use cases go away. The altcoins, which are being traded on Uniswap in a censorship-resistant, decentralized way, if the capital isn't inflowing, right, valuations are going up, the party ends, the punch bowl spills over, and everyone's going to enjoy the hangover, so to speak, right? And it's the same with everything that's been built in crypto so far. We have yet to really build something that's tapping the real world, creating value. I'd say maybe Bitcoin could service as that potential digital store of value to an extent. And I think that's been a big success of crypto. I think it's still been probably the biggest success so far. But all the narratives out there, while they may be good things to speculate on, as someone like myself who's a trader, I'll definitely take upon the momentum if I see it in the charts. We made great money in Q1 on meme coins, for example, in 2024. But if you're asking me really, like, if you're asking Nick, the same Nick who bought Bitcoin and cryptocurrencies back in 2017 and has been covering this space so optimistically with rose-tinted glasses, if I feel the same way here today that I did back then, I gotta tell you guys, it's nowhere near close. And to put it maybe even a better way here in kind of closing, if you asked me, you said, Nick, okay, like you have your money here today, would you feel comfortable putting all of your money into crypto over the next 2 or 3 years? In 2017, it would have been a 100% yes. Today, 0%. I would not feel comfortable having all my capital exposed to crypto, considering the life-changing returns I've made. And I'm pretty certain there are a lot of whales, there are a lot of other participants in the market, far bigger than me, mind you, who are thinking in the exact same way. And this brings me to kind of closing here, which is that, whether or not you've been in prior cycles before and made life-changing returns, if maybe you've gotten burnt in prior cycles and you want to make it back, and you want to get back to your prior all-time highs and net worth and value. Maybe some of you are in your first cycle here, right? No matter where you're coming from, I do not want you to be caught holding the $2.5 trillion bag of crypto here today. I'm someone who wants to find the next $25 billion cryptocurrency market like back in 2017. And I'll tell you, I have lots of markets like that I'm watching, but most of those opportunities, they're in equity markets. They're real companies. They have real value creation potential that could be life-changing for people in innovative fields of technology and research and science. And unfortunately, I come back here to talking about something that, people usually say that fundamentals don't matter. At the end of the day, guys, fundamentals don't matter so long as people believe in the dream. So long as they believe that one day there will be fundamentals, one day there will be some kind of use case or killer application. I've been waiting for that for 7 years in crypto. And I got to tell you guys, when I look around the space now, it's abysmal. DeFi is dead right now. I look at L2s, just spinoffs of EVM chains, time and time again. Very little innovation, very little new applications coming out. And I see the really fundamental apps like out there that might be changing and are trying to kind of build the next solution for it. While it really excites me, I don't see the rate of adoption yet that I think many people were hoping for. And so long as that continues, you can only speculate for so long. I think meme coins and this kind of late stage behavior we're seeing, this copycatting and just kind of slightly modifying things, I think it's all late stage stuff that shows crypto is perhaps like during the dot-com bubble with the internet, gonna go through a pretty heavy corrective phase or go through a period of stagnation until it can find that value. I think if we're simply relying on the institutions are gonna buy our bags, well, I think we may be very well sorely mistaken if we don't think that they're gonna be expecting that there's some increase in the fundamentals. Put in another last minute perspective here. I know I rambled a bit. $2.5 trillion. Global equities are valued at around $110 trillion. It's about 2.5% of the valuation of all real publicly traded companies that create value, that generate revenue. that's quite a high percentage. If you were to consider it like the kind of percentage allocation, you know, that people would say you should have crypto, maybe like 1-2%, we're effectively already there. So it's food for thought, guys. Doesn't mean that you have to sell everything. It's not an end-all, be-all doomsday prediction for crypto. It's just my candid thoughts. And simply put, I have my sights set elsewhere in markets to make those kind of returns. I want to keep making life-changing returns. I want to find the next big thing. I'm going to continue doing that here, guys. Russ and I are going to continue doing that, you know, here in DataDash. In the Dash report, we're going to continue to find those opportunities. So if you guys, you know, want to look alongside me and for those opportunities and join us on that journey, then you're welcome to the link down below in the description. But otherwise, guys, if you enjoyed this video, if it provided for some food for thought, consider dropping a like. It's a great way to support the channel. And I'll be back in the swing of things very soon. I hope you guys enjoyed this video, and I'll talk to you all soon. Take care, everyone.